Hi and welcome to Zeconomics. My name is Mr. Z, and in today's topic, we're going to take a look at one of the case studies provided in accounting equations. The transactions made by Firmenich and Co., a public accounting firm in France, for the month of August are shown below. Prepare a tabular analysis which shows the effects of these transactions on the expanded accounting equations. Now, we have to create a table like this, which comprises of assets, liabilities, and equity, which each of them are divided into, for example, assets into cash and office equipment, while the liabilities is divided into accounts payable, and the equity are divided into share capital and retained earnings, which consist of revenue, expenses, and dividends. Now let's get started to the first transaction. The company issued ordinary shares for 25,000 euro cash, meaning the company invest a cash for 25,000 euro in this company in exchange for ordinary shares. So how are we going to input these transactions? First, there is an increase in cash for 25,000 euro. Change the color of the pointer so it will be clear. 25,000 euro. And it also followed by an increase in share capital because in the first transaction they invest 25,000 euro, which is cash, in exchange for a capital, which also valued for, sorry, 25,000 euro. Okay, so there you go. There you have it. 25,000 euro in cash and also 25,000 euro in share capital. Now let's proceed to transaction number 2. The company purchased 7,000 of office equipment on credit. It means that there is an increase in asset in the form of office equipment for 7,000 euro. But since they are not using their cash, so there is no decreasing in the terms of cash of asset. But on the other hand, this transaction caused an occurrence of liabilities. So how do we input this? They purchase office equipment for 7,000 euros. So you have to write it down on the office equipment column, 7,000 euro, and followed by the liabilities, which in this case is the accounts payable. Yeah. Notice that at first they are using their own money. Yeah, so there is no liabilities just yet. But since now they are purchasing office equipment and they are using someone else's money, remember, assets can be acquired by either using your own money that is on in equity or using someone else's money that is liability. So in this case, the transaction caused the liabilities to occur in the terms of accounts payable for 7,000 euro. Okay, so there you go for transactions number 2. Proceed to transaction number 3. The company received 8,000 euro cash in exchange for service performed. So it means they already performed their service, they already have done their services to the customer, and the customer also has paid 8,000 euro in cash. So it's pretty basic. So we're going to input in cash, which has an increasing of 8,000 euro, and it also has an effect on equity. Yeah, in equity in the terms of revenue because the company has performed the services, so it receives a revenue for 8,000 euro. There we go, 8,000 euro for the service performed. Okay, proceed to transaction number 4. The company paid 850 euro for this month's rent. This is very clearly it is an expenses. Yeah, it is stated for month's rent. Meaning that every month the company paid 850 euro for the rent, yeah, because they still rent the office. So in this case, the transaction will cause a decrease in the term of cash. How much? 850 euro. So you need to put a bracket here indicating that it is a minus or it is a decreasing. It will decrease. It will decrease the asset for 850 euro, and also it will decrease the equity. So you need to put the bracket also for 850 euro. Yeah. So it's the same. It decreases the asset and also it decreases the equity because it's expenses. Expenses decrease equity. Okay. Okay. Now let's proceed to the last transactions. Sorry. The last transaction. The company paid a dividend of 1,000 euro in cash to shareholders. It means the shareholders of Fermany and Co. Received the dividend for their participation in the company, for the fair shares of the shares in the company. So we're going to. It means like this will decrease a cash, the asset in term of cash, for 1,000 euro. So we put the bracket and put the number 1,000 euro. And also, you need to put the bracket here in the dividend for 1,000 euro. So there you have it. All have completed, and now we just need to compute the total of the amount, whether it's assets, liabilities, or equity. So let's compute the assets first. It totals for 31,150 euros. Office equipment stays the same for 7,000 euros. Account payable also stays the same for 7,000 euros. And share capital still the same, 25,000 euros. Revenue 8,000 euros. Expenses, we put, don't forget to put the bracket because it indicates that the amount needs to be subtracted. 850 euros, and also the dividends 1,000 euro. Now, for the total asset, the total cash plus equipment will result 38,005, so 38,150 euros, while the total of liabilities plus equity will also result the same for 38,150 euro. So there you have it. This is the simple case studies. Um, Simple case studies about how the transaction affects in the accounting equation itself. I hope you enjoy it, and do not hesitate to ask questions in the comments below. Okay, I'll see you in the next video. See you and bye bye.